Hello, and welcome to this podcast on the recent decision of the Supreme Court in the Safari Judgement. I am Shiv Sapra, partner in the disputes and arbitration practice of Kocher and Company in New Delhi. I am joined by my esteemed colleague, Ms. Reena Khair, senior partner in the international trade and indirect taxation practice. Reena, let me start by asking, has the Safari judgment brought any relief in the real estate sector, specifically with the relation to GST?
Well, Shiv, there is some cautious optimism in the real estate sector, and I'll tell you why I say it's cautious and it's optimism. Optimism for the reason that traditionally credits have not been allowed for the real estate sector. Typically, buildings, immovable property are not considered goods, and credits have never been allowed in relation thereto, whether we go back to excise, service tax, or as far back as I can remember. So this is really a departure from the established practice in tax provisions that now for the first time credit is being allowed on a building provided it meets the functionality test. But coming to the cautious part I will add for the reason that the Supreme Court has laid down the guidelines but remanded the matter back to the High Court for examining on the facts of each case. And as you well know, when it gets to the examination of facts of each case, there are new intricacies which come out, and that's why we are a little cautious to see what type of buildings and businesses will actually get covered within the guidelines of the court.
Okay. Reena, I understand that the Supreme Court's ruling was passed in a departmental appeal against the Orissa High Court. Can you give us a brief background about the facts of the case?
Well, Shiv, the petitioner before the High Court was a company engaged in the construction of malls, and these malls were given on rent to various tenants. The construction of the mall itself required procurement of a lot of inputs and input services, and when I talk about inputs, I mean purchases of aluminium, steel, cement, and input services like consultancy or architectural services. Procurement of these input services means a significant outgo of GST to the vendors. And consequently, the petitioner was keen to avail the SENVAT credit of this tax. And they did attempt to take it, but the department disallowed it on the basis that these inputs are being used for buildings and therefore inadmissible. It's against this decision that the petitioners moved the Orissa High Court, and the Orissa High Court has taken a very liberal interpretation, and they have read down section 17(5) to mean that as long as the building is used for rendering an output service, the credit chain is not broken and SENVAT credit can be availed.
Reena, given that the Supreme Court's ruling is primarily focused on Section 17 of the CGST Act, what is the Supreme Court's interpretation of Section 17?
Well, Shiv, Section 17 is the section which bars credit on certain types of goods and services. One of the restrictions is that no credit would be admissible on immovable property, and the only exception to that is plant or machinery. Now, Section 17 is using these phrases interchangeably rather. In some of the subsections, the words are plant and machinery. In some of the subsections, it is plant or machinery. Plant and machinery has been defined under the section itself to mean equipment, machinery, apparatus, and it excludes all types of civil structure. In respect of construction services, it says plant or machinery, and Supreme Court has taken a view that the definition under the Act cannot be used as an aid for interpreting plant or machinery, and they have said that plant has to be interpreted separately from machinery, and therefore even buildings could be plants. So a building which is merely a backdrop or houses an office or is a situation where an activity is carried out, that will not be treated as integral. But if there is a building from which the actual service is rendered and it is essential for rendering that service, then that could be a plant or machinery. So that is actually the interpretation of Section 17, which greatly enlarges the scope of the admissibility of credit.
So, Reena, given this ruling, what kind of buildings would you say pass the functionality test?
Shiv, this is $1 million question, but I'll try and venture a guess. I think the obvious answers would be things like airports, ports, jetties, or warehouses. For example, warehouses are used for storage of goods. And if you didn't have a warehouse, you wouldn't be able to render the service.
So, Reena, now that the judgment is out, do you sense that there will be some kind of a backlash, or do you expect that the government may take some action on this?
I am of the firm belief that the government will take action because this has a huge revenue implication for them. The most likely thing I think is that they will amend Section 17, change plant or machinery to plant and machinery, and thus make the definition applicable and the restriction in force for all categories of credits under Section 17. The government has been consistently arguing before the Supreme Court that the word or in is in fact a typographical error. Although the Supreme Court said that if it was a typographical error, it ought to have been corrected. You know, GST Act came in 2017 and we are in 2024. Of course, the first thing is there could be an amendment which most probably would be prospective. The second thing is that they could move for a review before the Supreme Court, saying that they have not examined certain arguments which were raised before the court. But I don't expect that the government is going to just leave it as it is, because it is a very wide issue and has wide revenue implications.
So, the error, as usual, is on the draftsman.
Yes, absolutely. It's somebody else's error, as always.
And thank you everyone for joining us for this session. I hope it was enlightening for you as it was delightful for us. And we look forward to seeing you on the next session. Until then, this is Shiv and Reena signing off.